Okay, good morning everyone. It's 8:30. I'm Richard McNeil. I'd like to welcome you to our Easing Out of Lockdown webinar. I'm Managing Partner of Dains Accountants and I'd like to welcome everybody formally this morning. We'll try our best to keep to time and aim to finish by 9:30, but we've got about 150 people on the webinar this morning. And please note this morning's housekeeping rules therefore. In order to improve the performance of Microsoft Teams, please can I ask everyone to mute your microphones and to turn off your video facility. If you would like to ask a question, please use the chat facility and we will endeavour to answer your questions as part of the Q&A at the end of the presentations. So we're 127 days into lockdown and an awful lot has changed since March. Who can remember the days when we were just able to fly off for a quick weekend to Spain without much problem at all? But I'm sure that's making light of the situation as it currently stands. Certainly 127 days ago, many of us have probably never even heard of the term furlough. My useless fact for the morning is that the word furlough originated in the 17th century from the Dutch word Furlough and was apparently used as a military term when officers were granting soldiers a leave of absence. So that's my technical input for the day. And at that point, I'm going to hand over to Jim Hunt. Jim's a senior manager in our employment services team, and he'll endeavour to explain furlough in more detail. Jim, over to you.
Okay. Thanks very much, Rich. So I think it's fair to say that I originally thought that furlough was probably a farming term. So nobody ever heard of it, and hasn't it been a steep learning curve for everybody since then? So of course the points today. So we are going to run mainly in respect of the furlough scheme, the large changes that came into place from the 1st of July, the complexities within the scheme. I think probably anybody that's dealt with it will realise very much that a lot of the statements that have come out, from Rishi Sunak make it seem like it's fairly straightforward. Once you start to delve into it and to deal with it on a regular basis, people will realise that's not the case at all. There are a lot of intricacies and a lot of small points to get handled, shortfalls and risks. Some common client questions, the things we've been asked as we've been working through the process. Just then touch on sort of workforce planning. What we know about the job return retention bonus scheme, which isn't a huge amount at the moment, and just an illustration on where you might want to go with your workforce. But of course, that's something Paul will pick up on a lot more in his session. And then just remember, it feels like everything's become about furlough, become about coronavirus, but of course that there are many other aspects of employment taxes, changes that are coming up that we still need to be mindful of, opportunities to be taken, and just things to be careful of. Okay. So the furlough scheme changes. It's fair to say that it's been going since March. HMRC put very much a big demarcation line down between the end of June and the 1st of July, referring it to as old scheme and new scheme, where the changes they put in place an intent to try and encourage people to get staff back to work and making the scheme more flexible in various aspects to allow them to do that. So of course the main changes being the flexible furlough, the ability to be able to bring your staff back on a part-time basis if that's suitable from the 1st of July. So of course the one point to make around now is you can only flexibly furlough somebody if they were properly furloughed under the old scheme. So that's somebody who needed to have served at least 3 weeks furlough, a 3-week consecutive period prior to the 30th of June. So it could be any 3-week period. They could have been off the first 3 weeks from March through to April and been back at work all the time since then, but you're now able to flexibly furlough them. No minimum furlough period. So the 3-week period we were all working with before has now been erased. That allows employers to maybe think, I've got a contract for 2 weeks, I need people in, I can bring some staff in, bring them in on a full or part-time basis during then, and then flexibly furlough them again at the end of that. One of the restrictions they have put in that's made it more awkward for some clients is, of course, the ability or the lack of ability to submit a single claim that maybe covers multiple pay periods and cross a calendar month. So where historically we might have done a claim for a client that ran from March up till the end of May or June, now everything has to be done covering a period the 1st to the end of the month. You don't have to submit a claim that covers that whole period in one go. If maybe you've got a weekly payroll, you could still submit your claims on a weekly basis if you wish. But what you can't do is have one claim that hangs over the end of the month. And for anybody that's maybe not got their claims in yet for the period up to the end of June, they have to be in by this Friday. HMRC have said basically that that's the ultimate cut-off point. If your claims to the end of June aren't in by the end of Friday, the ability to submit those claims is going to be taken away. And at that point, you just won't be able to get the money for that period. The changes to the scheme where the government are winding it down in their attempt to try and maybe hope that the economy is picked up by that point, or make employers push people back into work. As we stand today, the arrangement that you can claim is still the same as it was back in March. You can claim 80% of reference pay, the employer's national insurance that's associated with that, and the minimum amount of pension contributions. So that's 3% on the auto enrolment basis. The phasing in of changes is from the 1st of August, the entitlements to those additional elements, the employer NIC and the pension, are being taken away. From the 1st of September, you'll only need to claim 70% of the reference pay, not 80%. And from the 1st of October, again, 60% rather than 80%, with the scheme closing at the end of October. Because it is worth saying that throughout all of that period, the employee has still got to be paid the 80% of their reference pay. Of course, that brings into effect the fact that employers are going to start incurring costs, so they need to start thinking about how can they manage those costs. The complexities that we've been seeing in the scheme, or the changes that are coming in from the 1st of July, is introduce a concept of usual hours. So rather than the scheme as it ran up till the end of June, being on a proportional basis just based on calendar days, because people were fully furloughed, the usual hours concept is something that's introduced where you flexibly furlough your staff. So they come back on a part-time basis. If somebody is still on full furlough, so they are not working at all throughout the whole of the pay period that you're claiming for, then you don't have to worry about usual hours. If you've brought people back on a part-time basis, or furloughed people and then they'll come back on a part-time basis, you need to understand the concept of usual hours. As with the reference pay that we had to use previously, this is something that's pegged into the past. So somebody, what were their contractual hours as at their last pay period before the 19th of March? So if somebody's on a set level of hours, of course, that's fairly straightforward to work. If you've got people that you determined at the outset of furlough, they were variable hours staff, then of course there's more data to gather, more calculations to do to understand what usual hours means. One point to mention, for variable hours staff under the old scheme, you could choose to pay them based on the higher of either the hours that they undertook in the same pay period in the previous year, or the average hours that they worked for 2019-20. Under flexible furlough, you have to use the higher of those two, not an option. National insurance calculations, this is just an oddity. We're not quite sure where HMRC went. So it's something if you maybe are using your own spreadsheet or tools to calculate rather than HMRC, being mindful of the change in the methodology for July onwards. Up till the end of June, the method was that you calculated the whole national insurance value on all pay that somebody might have received in the period, and then just apportion that between the furlough pay and any other pay. From July onwards, where you're using flexible furlough and you've got the usual hours concept, you're actually then going to apportion the national insurance bands between furlough pay and work pay and calculate differently. Claim timetable restrictions. This is just picking up on the point that I've mentioned about the need, one, to get everything in by the end of June, two, ensure that as much as possible, you're picking up a whole pay period at one point. HMRC do allow in their detailed guidance, you can have what's called an orphan period. So if you run a monthly payroll that runs to the 20th of the month, you could put a claim in from the 1st to the 20th of July. And then when you know the values for the next month, if you don't want to wait till the 20th of August to start putting your claim in, you can run one that runs up till the end of July. But of course, you've then got to start portioning all the pensions and the national insurance bands. There is no, at the moment, mention of any specific monthly deadlines for submitting claims. So we've got the 31st of July for everything up to June, there's no mention of when a claim for the 31st of July has to go in by at this time. Reference pay. So this hasn't changed from the initial outset of the scheme. So if you've already gone through the exercise to calculate the value of pay that you can claim the 80% of, that value still stays the same for any flexible furlough calculation. The only difference with flexible furlough is you're adding an additional step to calculate the proportion of it that you can claim. So if somebody works 50% of their usual hours, then it's 50% of the reference pay is the value you can utilise and then claim 80% of that. Of course, 70% September, 60% in October. Some of the shortfalls and the risks that have come about. So directors doing more than statutory work. After some initial queries at the start of the scheme coming in, HMRC did state that a director could be furloughed. Now, they would have to go through the usual process that applies to employees. So they had to be notified in writing, they had to agree to it, and whereas employees had to stop doing any work, a director was still allowed to do statutory work, which HMRC considered things like filing the VAT return, filing the accounts. If HMRC, were able to undertake a review and were able to demonstrate that directors had been doing more than statutory work, if they were doing anything that can be seen to generate trade, generate profit for the business, that potentially risks the claim. HMRC might consider that the whole of any claims to date need to be repaid. A new furlough agreement. Again, at the outset, you're required to document in writing the furlough agreement with your employees. They had to provide their agreement to that. That document has to be saved on record for 5 years. If you then subsequently moved to a flexible furlough one, the existing agreement falls to one side. You have to put the new agreement in place. And again, that's got to be documented in black and white and agreed by the employee. The employment allowance, an odd interaction here. So of course, a lot of employers are allowed to claim a offset of national insurance. It's £4,000 for the current year against employers' national insurance costs. What HMRC have said is it's almost you can't have your cake and eat it. If in the period that you're making a claim for, you're utilising the employment allowance, you can't also claim the national insurance costs associated with the furlough in your claim. HMRC said if you're not having to pay it because you're utilising the employment allowance, we're not going to give you the money, which makes sense. So one thing to consider is, what's your national insurance liability to date? Are there other elements of pay being going through, people already back at work, or the working element of flexible furlough that you might be utilising the employment allowance against, which maybe then still does allow you to include the costs within your claim. The consequences of errors. Now, again, it's early days, because we know that HMRC have said that all records relating to a furlough claim need to be kept for 5 years, and that they will be undertaking reviews. Now, at the moment, what we haven't seen in practice is how in-depth those reviews are going to be, what process HMRC officers will go to collect the data necessary to undertake a valid review, and how punitive they might be if somebody's got it wrong. This is something that's coming very quick. It's been very complex. HMRC should take on board the fact that there are going to be errors made, which are different from somebody who's seeking to profit from the scheme unreasonably. We know, you may have seen in the press coverage, somebody was recently arrested, the first example of furlough fraud. I think it was actually in Birmingham, and near enough on £500,000 has been considered as illegally obtained through the scheme. But that's different to somebody maybe getting the sums wrong because they didn't understand it. HMRC would still require repayment of any sums that have been claimed in error and potentially interest. But when it comes to the consideration of penalties, there should be reasonable grounds to consider, HMRC are showing leniency. Okay, the questions that we're getting from clients: can you claim pay for notice period of employees who've been made redundant? Yes, if somebody's on furlough at the point that they're made redundant, then as long as they serve that notice period, they can still be furloughed throughout that notice period, and that element of the 80% reference pay still included within your claim. As one point to take into account is if you're only paying somebody 80% at the moment because they're furloughed, at the point they're serving their notice, you would have to put that up to their usual contractual notice pay entitlement. One point of planning, if you terminate somebody without notice and pay them pay in lieu notice, none of that element will count towards a furlough claim. So something to bear in mind. There are other reasons why you might want somebody not there, but that's Paul's area for more greater consideration. But from a financial perspective, somebody working their notice on furlough is more beneficial financially than a payment in lieu of notice. How does salary sacrifice for pensions impact the amount claimable? In terms of the value of the reference pay, which is the sum that you can claim 80% of, that is the value after any reduction for salary sacrifice. So people have got schemes in for childcare or pensions or various other elements that are still permitted. You have to make sure that you're still paying the employee the right amount. If maybe you've undercalculated it and you're not giving them the right amount, of course, then the risk your claim isn't valid because you're not giving the employee the 80% that they're entitled to. As well, when you're calculating your payroll, if you've still got the salary sacrifice in place, some people were allowed to opt out. HMRC considered it counted reasonable grounds to opt out of a salary sacrifice scheme due to coronavirus. Then, of course, somebody's gross pay, their furlough pay you're paying them has to be the amount after any salary sacrifice reduction. So it'd be 80% plus has to sit in as the notional pay before the salary sacrifice. Can people take holiday during furlough? Yes, they can, but there is a cost implication to doing it. If you're again paying your employees the 80% that they're entitled to, then if they're taking a holiday, you have to top them up to 100% of their normal pay. So that's a consideration for employers. Some have decided we can't afford that extra cost at the moment. So of course what they've said is to people is you can carry your holiday entitlement forward. And where the government have supported this is to say somebody's statutory holiday, the first 4 weeks of every year, they could potentially carry it forward up to 2 years if they're not reasonably entitled or allowed to take it. Can holiday pay be claimed through the furlough scheme? So the 80% calculates as the reference pay can be claimed. Any element of top-up that you've paid is not eligible for inclusion in a furlough grant claim. Do employees need to be furloughed for a minimum amount of time from July? As we've already referred to on this, no, they don't. The 3-week period that existed prior to 1st of July has now gone by the side. So, workforce planning. So we know at the start of the month, the Chancellor mentioned several initiatives to try and drive the job market, to try and support jobs. One of these was the job retention bonus scheme. Now, we might have further details or, the black and white on this by the end of the week. But what we know at the moment, that the government make a £1,000 payment to employers for each eligible employee. Now, we think at the moment this is somebody who might be on furlough at the moment, and following the closure of the coronavirus job retention scheme at the end of October, is retained in employment at least until the end of January 2021. Is on a minimum salary of £520 per month. So we know in the press that some high-profile employers have turned around and said they're going to turn this down. That's very much an individual consideration. Now, should I retain staff or should I make them redundant? Paul will touch on more of the details, but we did have a quick look at what the costs might be covering a specific scenario. So an employee on £28,000 a year, age 35, 5 years continuous service, and a 3-month notice requirement in their contract. So if we retain the employment and they're on furlough until the 31st of October, and then retained in employment until the end of January, the cost to the employer just shy of £8,000. If they are made redundant, as at the 1st of August, notice is given, but as we mentioned earlier, they serve that notice on furlough, and then at the end of that, of course, they receive their statutory redundancy. And then, as at the end, they are made redundant, replaced as at February, when maybe when things pick up, with an agency cost, £9,500. And worst case scenario is if you make them redundant and pay in lieu of notice, so they're gone straight away, no entitlement to claim any costs through the furlough scheme, just over £16,000. So if you are planning ahead, of course, it's worth doing the sums. It's worth taking advice to consider what's the best option. So then just picking up on some of the points, the employment tax points we can't forget at the moment, off payroll working. Of course, we know prior to April 2020, this was almost the press coverage before furlough, the big item HMRC were banging on about, the fact that it was coming into effect from April 2020. It hasn't gone away, it's just been postponed. So HMRC did pull it back, but have now confirmed it's coming in place from April 2021, unless we hear anything different. But the legislation has recently been passed in the finance bill, and with no changes to the legislation that had already been set up. Some people were campaigning that there would be changes, that would be concessions given in the legislation, but no, not at the moment. So in terms of consideration of that, it impacts those using sole traders, service providers who operate through their own limited company. So if you're the utiliser of such a service, if you're small under the audit thresholds, then you've got an exemption from this legislation. Of course, being mindful, if you've got a business that's growing, it may come in further down the line. It's going to add additional admin and potential cost into the supply chain, because what you're required to do is assess whether IR35, a consideration of employment status, applies to the engagement of the individual providing their services to yourself through their limited company. And if you determine that it does, of course, you have to operate payments rather than to the limited company, go via the payroll. So that, of course, adds the additional cost of employers' national insurance. Salary exchange for pensions. So trying to take a positive note, we've got businesses that are trying to shore up the bottom line or improve employee take-home pay. If at the moment your employees make their own contributions into the company pension scheme, either just deducted from net pay or maybe just given tax relief through the pension scheme, this is an easy to utilise opportunity to improve the position for both parties. By utilising salary exchange, both the employer and the employee will save national insurance. Just take an example of an average employee earning 30,000 a year, pensional pay is 5% of all pay. You look at the employer's position, of course you can see, substantial costs over a 5-year period can, easily be generated. Again, if you're looking at the moment, how to improve your business, how to maybe help employees when everybody's been struggling, this is something to consider if you're not utilising it. HMRC compliance. Again, we know there's going to be a lot of activity in respect of, furlough claims, reviews for audits of those by HMRC. We don't know whether they're going to be a singular exercise or they will be wrapped within, a general employer compliance review. Of course, it's also fair to assume that HMRC is going to come under a lot of pressure, a lot of scrutiny from the government to bring more money in. There's a very large black hole in the coffer. This is going to be one way that they're going to potentially look to fill it. So we might see more compliance activity generally from HMRC, where people get things wrong, of course there's interest and potential penalties. It's always worth getting ahead of HMRC. If you know what they're going to look at, you can ensure in the first instance, am I doing things correctly? Are my systems sufficient that when HMRC come and do a review, they're going to find little or nothing, and then they're going to go away. Okay, so the areas where we've historically seen HMRC get easy wins, company cars for staff, private fuel provision. You might not realise that you're providing private fuel to staff, but if you've got a system that allows employees to purchase fuel via the company and the control of the repayment of private fuel isn't operated correctly, and it's easy to get wrong, unfortunately HMRC can then impose cost for the entire year. Employment status, as I mentioned, we've got off payroll working coming into play, but of course engaging somebody directly as an individual rather than through a limited company on your payroll, you've still got an obligation to consider the employment status of that arrangement. And the little ones HMRC get, paying employee bills. Is somebody putting their home broadband or personal mobile bill in with their expenses claim each month and they're getting the money back from the company? Again, there's a tax and national insurance liability potentially if they are. Okay, so I'll hand back over to Rich now.
Thank you, Jim. In fact, what we're planning to do is to do questions at the end of the presentation, which I trust is okay with everybody. But what I'll just do is take a moment, first of all, to thank everyone that completed the survey prior to this morning's call. The results were really interesting, actually. First of all, we asked about furlough, and broadly speaking, 9 in 10 felt that furlough calculations had been done correctly, despite the complexity in completing those. But 11% of all respondents actually felt that it was possible that their furlough calculations might be incorrect. And as Jim says, we know there'll be some activity from HMRC in the future, and we're very happy to look at auditing numbers that have been put forward in the past. And the sooner the better in that regard. If you've made an error, perhaps there's an opportunity to correct it. So I'm sure that Jim's presentation will have provided food for thought, and we've got some great questions coming through. So just a reminder to everyone, please to use the chat facility if you do have any questions. We'll cover as many of those as we can at the end of the presentation. But I'll hand over now to Paul Roberts, Head of Employment Law at Keelys. We use Paul and Keelys as our retained advisor on all matters relating to employment law. And I'm sure you'll find the presentation really interesting. As part of the survey, we established that 42% of respondents are planning to make redundancies, 27% are undecided, and only 3 in 10 businesses, our employers, were absolutely not going to make any redundancies. So without further ado, I'll hand over to Paul.
Thank you very much, Richard, and thank you to Dains for inviting us to take part in the seminar this morning. So first of all, I just wanted to begin by looking back over the last few months at the employment law challenges of COVID-19. And you know, it seems a long time ago now, back in February and early March, but the initial reaction, I think, for most employers was simply panic. None of us have really experienced anything like this before. And of course, employment law doesn't really tell you how you're supposed to deal with a pandemic. Your contracts, your policies and procedures don't really tell you that either. So the initial reaction, frankly, was simply one of panic. But then Rishi Sunak rode to the rescue to some extent on his white charger with the furlough scheme, which has been a great help to many businesses. Keelys ourselves have used it for some of our staff. The problem was, understandably, it was implemented in a great hurry, and he stood up and announced the scheme, which took effect immediately. In fact, it was retrospective. But at that point, we had no guidance as to how the scheme actually worked in practice. So, for example, it took some time before it became apparent that you had to furlough employees for 3 weeks in order to be able to claim under the scheme. Eventually, we had the guidance, but that left lots of questions unanswered and still a lot of confusion. And almost on a daily basis, the government was updating that guidance to try and make the position clearer. And now, as James has explained, we have ended up with a pretty clear guidance. So whether it's Dains or Keelys, we can give you pretty clear answers to any questions you may have on the furlough scheme. But there were plenty of occasions over the last few months when, you know, the honest answer was to say we don't know because the guidance wasn't sufficiently clear. Another question employment lawyers have been debating is the whole problem of whether it's safe for employees to go back to work. You know, as employers, you try and make your workplaces as safe as possible for employees to come back to. And there's government guidance for different sectors as to how that should work in practice. But what if you ask an employee to come back to work and they refuse because they don't think it is safe? They're not willing to expose themselves to the risk of catching coronavirus. Thankfully, that doesn't seem to have been too great a problem in practice. I think employees have understood the efforts their employers have gone to keep them safe. And of course, many are still working from home, which is the safest solution. So far, that hasn't really proved too much of a challenge. It may prove more of a challenge in the next few days when the government, I think, is going to be increasingly encouraging people to go back to work. So we may have more work to do on that. The other interesting thing in terms of employment law is that, of course, it's all well giving people rights under an employment law, but to enforce those rights, you have to go to an employment tribunal. And employment tribunals have pretty much ground to a halt over the last few months. The administration that goes on behind the scenes has to a large extent ground to a halt because all of their staff haven't been able to come to work, or many of them haven't been able to come to work, and their systems don't really allow them to work from home. and very few face-to-face hearings have taken place for obvious reasons. So a massive backlog is building up in the tribunal system, just at a time when, because of everything that is going on in the workplace, more and more claims are going to be going into that system. And my guess is, if you were to dismiss an employee today and they put in a claim for unfair dismissal, in the West Midlands, it could take 18 months to get to a tribunal hearing. If you were in London or the South East, it could actually take maybe 2.5 years to get to a tribunal hearing. So there is a massive backlog there. Now, you might say that's fine from the employer's perspective. Usually, if you're defending a claim, you're in no rush to get to a tribunal hearing. It's more of a problem for the employee. But what if in the next 1.5 years before you get to a tribunal, the manager, let's say, who took the decision to make someone redundant, has themselves left the business? If your star witness has left, that's going to put you in a difficult position to defend a claim. So there can be some difficult consequences for employers as well. It was interesting, as Richard said, that with the poll that we asked before in the last few days to delegates on this seminar, how many of you are planning to make redundancies? 42% said definitely yes, and 27% said that you might do. So roughly 2/3 of you are either making redundancies or thinking about it. And that reflects, I think, what I'm seeing in my workload at the moment. That many employers across the country and across different sectors are making redundancies. And of course, the furlough scheme has been a lifesaver, but from August, employers are going to gradually start to have to pay the costs of that. And I think employers are saying, well, if we know we're not going to need employees and we can't see business picking up anytime soon, we're not willing to bear those costs just for the sake of it. We're going to crack on with redundancies now. But redundancies really should be a last resort. So before we come on to look at how redundancies work, let's just look at some alternatives to redundancy. And as I say, the furlough scheme, or now flexible furlough, is in itself aimed at being an alternative to redundancy. So there's nothing wrong with keeping employees on furlough or flexible furlough until the end of October. As James has said, employees can even be kept on furlough during their notice period. But what this has meant, let's suppose you've got an employee who's on 3 months' notice. Are you going to keep them on furlough until the end of October and then make them redundant then, at which point you're going to have to bear all the costs of their 3-month notice period? Or are you going to make them redundant now, give them 3 months' notice, keep them furloughed during the notice period, and HMRC are going to bear most of the costs for the notice period? Chances are you're going to do the latter. And so that's partly why many employers are now grappling with redundancies. One of the questions we were asked in advance of this, let's look ahead to November and December when we no longer have furlough or flexible furlough. What if we want to still keep employees on short-time working then? Well, then we come back to the employment contract. And when this all kicked off back in March, we were dusting off contracts and looking at whether they had the right in them to lay staff off temporarily or to implement short-time working. If they do, then you're quite entitled to do that. You don't need to consult with the staff about that. You can simply implement a layoff or short-time working. And potentially short-time working could go on indefinitely until hopefully one day business picks up. But what if you haven't got the right in the contract to implement short-time working? Well, in that case, we can't just impose it. That would be a breach of contract. So you need to consult with staff and try and persuade them to agree to go on short time. And of course, the incentive to try and persuade them to agree to that is that it avoids redundancy. Now, hopefully that will be attractive to most employees, but you might have some long-serving staff who would be entitled to substantial redundancy payments. They might be quite happy to be made redundant. So it could be tricky dealing with some of those employees. Or we might consult with staff about introducing part-time working. That, in a sense, is the same as short-time working, but short-time working is intended to be a short-term measure just to get us over a particular problem, whereas part-time is usually a permanent change to an employee's contract of employment. So if you can see that really indefinitely you're not going to need an employee on a full-time basis, you could consult with them about moving to part-time. But if they're not willing to agree to that, you would either have to keep them on full-time or make them redundant. Another possibility is retirement, because of course forcing employees to retire constitutes age discrimination. Employers are often very nervous about discussing retirement with employees. But my view is there's nothing wrong with that as long as you do so sensitively. And many of you will be looking at how you structure your workforce going forward. I think there's nothing wrong with going to your older employees, explaining that you're doing that, and just asking them if they could let you know what their plans are for retirement, and then you can factor that into your planning. I don't think there's anything wrong with that at all. Another option we've seen some clients introduce over the last few weeks is job sharing. So this is essentially where 2 or more employees agree to reduce their hours to part-time and then effectively share a job. So really, we're renegotiating their contracts. They move from full-time to part-time. We might also want to build into the contract the concept that if their colleague leaves and we can't find someone else to job share with them, and perhaps they're not willing to work to revert to full-time working at that point, we might have to terminate their contract in order that we can recruit someone on a full-time basis to replace them. But potentially that can be quite a good solution. Another option is pay cuts. We tend to think that pay can only go in one direction, it can only go up, but potentially it can go down. You can potentially say to an employee, look, we have got the work to give you, but it simply isn't profitable to do that based on your current salary. Are they willing to take a pay cut? And again, that can be negotiated with the employee, and potentially the alternative may be to say, unfortunately, if you can't agree, not willing to agree to a pay cut, we may have to terminate your employment. Another option might be a career break. The employee just takes a career break or effectively a period of unpaid leave to get us over this current crisis, and then they can return to work next year. So all sorts of options. And one question we were asked in advance of this is, does this have to be discussed formally as part of a redundancy consultation? Well, the answer is no. It could be discussed quite informally, because really all of these things are intended to try and avoid the need to consult about redundancies. So you could let employees know that you are thinking about having to make redundancies and suggest some of these options to them, and see whether these are of interest to any of your staff. The other option is that sometimes you consult about redundancies, but at the same time you put these options on the table, or often they're floated by the employees themselves. They come back and say, actually, rather than being made redundant, are you willing to consider part-time or a pay cut, or whatever it may be? So lots of different options. It doesn't necessarily all have to be discussed formally. But if you can reach agreement with your employees around any of these options, that should then be formally documented to avoid any confusion about what someone's hours are or what someone's pay is going to be in the future. So what if we do have to make redundancies? It's obviously important that we get that right. And there's 4 main things to think about. First of all, there is the structure. So what I mean by this is looking at the current staffing structure of the organisation and thinking about where you want to get to. So it could be as simple as saying, well, currently we have a receptionist. In future, we're not going to have so many people coming into the office. We're going to be dealing with people more remotely. So we don't need a receptionist. That's a change to your structure. And an employment tribunal isn't going to challenge you on that. That's not really a legal question. That's just a business question. So it's for you to decide what the right structure is for your organisation going forward. I think the most important thing that a tribunal is going to be interested in is how you select employees for redundancy. Now let's go back to that situation with the receptionist. If you decide you can do without a receptionist and you've only got one receptionist, that's quite straightforward. Clearly, you're going to select your receptionist for redundancy. But what if you've got 5 receptionists and you think in future you could manage with 3? Well, in that case, we would need to put all 5 of those receptionists in a pool and select for redundancy based on objective criteria. And we'll come on to that a bit more in a moment. Then we need to consult with staff, either collectively or individually, and we also need to consider any alternative employment they can be offered. So, as I say, selection is really the most important thing, because this is really about whether someone keeps their job or loses it. Quite often, we would first of all look at employees with less than 2 years service, because those employees aren't going to be entitled to a redundancy payment and won't be able to claim unfair dismissal either. So we could simply select those employees for redundancy very easily. That's not to say we have to. You might want to put them in a pool for selection, because you may have recruited some new employees who are very capable. So you don't have to, but that can be quite an easy solution. As I say, where you've got employees like the receptionist in a unique role, they are simply selected for redundancy because they're in that role. If we've got several people doing similar work, we then need to put them all in a pool for selection. And we then need to come up with selection criteria to decide who's going to stay and who's going to go. And as far as possible, those need to be objective. So what we mean by objective is really something that you can produce a number for, a score for, rather than just a situation where you're plucking a score out of thin air. So traditionally, length of service was often the main or the sole redundancy criteria. These days, that's fallen out of fashion because of age discrimination, but it's still perfectly appropriate to have that as one of your selection criteria, along with several others. And it's a good criteria because it's objective. So, for example, we can say we'll give employees perhaps 1 point for each year of service up to a maximum of 10 years. So it's a purely mathematical process. Other criteria that are good are disciplinary record. We could say you get 10 points for a clean disciplinary record, 8 points if you're on a verbal warning, and so on. Attendance is another good one. So one way of doing that is to say everyone starts with 10 points. We knock a point off for each day off they've had in the last 12 months. So again, it's a purely mathematical process. Then we might look at people's skills, their experience, their qualifications. None of these things are set in stone. It's for you to decide what the right criteria are to leave you with the best employees to drive your business forward. Just mention the furlough bonus here, because I've chatted about that to 1 or 2 of our employees. This is where, as James was saying, if you furloughed employees, but you keep them on the books until January, you get a bonus of £1,000. I was saying to my clients that I don't think £1,000 is enough to really persuade you to keep employees on if you don't really need them. And one particular client agreed with that, but he said, well, £1,000 might be enough that we keep we perhaps keep those employees and maybe select other employees for redundancy in order to get our hands on that £1,000 cash. So that could be an unintended consequence of the furlough bonus scheme. And then once we've selected employees for redundancy, we also have got to consider if we can offer any alternative employment to them. Now, typically, as your organisation is shrinking at this point, you may not have any vacancies to offer, in which case that's fine. But if you have to consider offering them to any redundant employees. And even if they are at a lower level, it's far better to offer them to the employee than just to assume they wouldn't be interested because it's at a lower salary. Now, we also act for employees. And I had a call the other day from an employee who was made redundant. effectively 2 jobs were being merged into one. And what this employer did, he selected the 2 employees for redundancy, but also advertised the job externally and has given the job to an external candidate. Because they say that my client, this employee who's been made redundant, isn't the best person for the job. They're not as good as the external candidate. Well, I'm 99% sure that we're going to win that claim for unfair dismissal, because you have to give preferential treatment to your existing employees. You have a duty to do that. And so the way I put it when I'm advising employers about this is that you shouldn't say, well, is our redundant employee the best person we can find to do this job? The question should simply be, are they capable of doing the job? If they are capable of doing an alternative role that's vacant in the organisation, that should be offered to them, or you will be at risk of a claim for unfair dismissal. And then finally, consultation. Now, we only have to consult with employees collectively if we're making over 20 redundancies at one site in 90 days. And it is clear that it does have to be at one site. If you remember a few years ago, Woolworths went bust, and there was a case concerning whether they had to consult collectively, because perhaps in Lichfield, let's suppose they were making 18 redundancies, but maybe they're making 5,000 across the country. Do they have to consult collectively or not? Well, the answer was no, at least not in Lichfield, because at that site they're making less than 20 redundancies. But if you are making 20 or more redundancies at one site in 90 days, it's important that you do consult collectively with staff. Otherwise, they could each be awarded 90 days pay simply because you haven't consulted collectively with them. If you're making less than 20 redundancies at one site in 90 days, we can simply consult with staff individually. So what does that look like? Well, we would let the employee know they've been provisionally selected for redundancy, and we would tell them why. It may be because their job is simply being removed from the structure, or it may be because they've been put in a pool and we've selected based on objective criteria. Either way, we should be completely open with the employee. So we should let them know what the criteria are and what their scores were. We don't, though, have to let them know what their colleagues' scores were. That is confidential. We then give the opportunity to the employee to suggest any alternatives to redundancy, like the ones we were discussing previously, but also to challenge their selection for redundancy if they want to. They might argue that the scores, there's been a mistake in the scores, for example. We hear what the employee's got to say, and we usually then confirm the decision shortly after that. And that doesn't need to be a long-winded process. Often it can be done within a week or so. And typically we find employees actually like this. Employees don't want this process to be dragging on any more than you do. They really want to know, do I have a job or don't I? So it doesn't need to take very long. In normal times, we would do that face to face. At the moment, many employers are doing redundancy consultation virtually, which makes sense given the encouragement to maintain social distancing. And also, if typically a redundant employee is on furlough anyway, do they really want to be dragged into the workplace just for a redundancy consultation meeting? Probably not. So I've actually taken part in some redundancy consultation meetings over the last few weeks on Zoom, and I found that actually can work quite well. So there's nothing wrong with that at all. Finally, then, if you want our support on grappling with all of these issues, in particular making redundancies, the most cost-effective way of sourcing our advice is to subscribe to our retainer service. So very quickly, it covers 3 things. First of all, a review of your contracts, policies and procedures to make sure they're up to date and comprehensive. Covers unlimited advice on day-to-day issues like redundancies, like the furlough scheme, but also things like disciplinaries, sickness, all the usual sort of HR issues. And we can give you online access to a bank of letters, contracts and policies. If you would like a quote for that, please just send me an email. You've got it on the slide there, and I'll be very happy to give you a quote. But I'll hand back to Richard and then be very happy to take any questions. Thank you.
Thank you, Paul. I guess we need to stop screen sharing at that point, Paul, if that's okay, and we'll take some questions. We've had quite a few. I'm not sure that we'll get through all of them in the time allotted, but we have made a note of all respondents, and if any questions don't get answered in the allotted time, we will follow up after the webinar. Let's kick off with this one then. Jim, I'll ask you to pick this one up. Jim, do we need to keep a copy of a flexible furlough agreement that has been signed by the employee? At present, we have agreed verbally and logged an unsigned flexible furlough agreement. And in a similar vein, is an email furlough agreement acceptable, or do they need to be printed and signed? And you'll need to unmute Mim on there, Jim.
Okay. HMRC have said in the guidance it does need to be a written agreement agreed with the employee. So first instance, in terms of verbal, you do need to have that documented in black and white. Whether it constitutes an email, I think if you've got the exchange that sets out the full details and an email back for the employee agreeing to it, then that should be sufficient. But in terms of any of the documentation, HMRC have said you need to be keeping those records for 5 years, because it's it is an element that they would want to pick up and consider if they're reviewing the furlough claims that you've submitted.
Okay, and Paul, perhaps you just comment on that email point.
Yes, email furlough agreements are fine. And this is one area of confusion as the guidance has continued to evolve and keep changing. I've just looked at it actually while we've been on screen, and what it currently says is that once the employee is told they're on furlough or flexible furlough, they do not have to provide a written response. So it's obviously ideal if the employee does provide a response, perhaps by email, to confirm their agreement. But currently, the guidance says they don't actually have to provide a written response.
Okay, thank you very much. Next one, for the furlough bonus, and again to Jim, can staff be on 0 hours contracts?
Well, we're awaiting definite black and white detail on, the full intricacies of the furlough bonus. The Chancellor's promised that we will see something by the end of this week. In terms of the fact that you were allowed to furlough an employee on a 0 hours contract, providing that employee has been furloughed and retains employed between October and November and January, and of course you are giving them sufficient hours that they earn the £520 a month minimum, then at the moment, based on what we do know, I would suggest that they are eligible. But we'll confirm more when we know the exact details.
Okay, thank you. Paul, an interesting one this, relating to potential redundancies or restructuring. So if, for example, you want to restructure a team from 3 to 2 and one person scores lower than the other 2 in the selection criteria, do you need to involve everyone in the process and cause the employees who score better unnecessary anxiety? And if you offer voluntary redundancy, does this need to be to all employees, and what happens if an employee applies who you don't want to take?
Well, first of all, in terms of consulting with other employees in the pool, employers don't like having to do that. It puts them off redundancy consultation because they don't want to unsettle their whole workforce. My view is you don't actually need to do that. My approach normally is to carry out the selection process behind the scenes, if you like, and then just to consult with the employees who we've provisionally selected. So we don't really have to unsettle the employees who we want to keep. In terms of offering voluntary redundancy, that doesn't have to be to all employees. It could be to particular departments, or I've even had clients in the last few weeks go to individual employees and suggest to them that they might want to volunteer for redundancy, and that has proved quite successful. On the other hand, you might get employees who volunteer for redundancy, but you don't want them to actually take voluntary redundancy. That's fine. It's important when you do invite people to volunteer that you say you reserve the right to accept or reject any applications that you get, and that keeps your options open. So it comes down to your discretion.
Okay, very good, thank you. Jim, please can you give more details about the employment allowance and how you apportion across the year? I don't know if that's one you might need to come back to.
Okay, I can pick up on that one. It doesn't normally something that apportions across the year. So if somebody's got a more specific question, I'm happy to pick it up later. It normally just you utilise it as the liabilities arise. So if in month one you have £4,000 of employers' national insurance liability, you'll have utilised all the allowance at that point. You know, it's not a case of where you might be considering the apprenticeship levy, where you apportion the 15,000 over maybe over a 12-month period. The employment allowance, you just work through it as the employer's national insurance liabilities arise. So what you can't do, I suppose, in that aspect, is say, right, I've got 1/12 of 4,000 in April. I've got more employer NIC relating to furlough claims than that, so I can put that value into my furlough claim to submit to HMRC. That wouldn't be appropriate.
Okay, thank you. Slightly different theme, and again, I think for Jim, what advice do you have for reimbursement to employees for home working expenses of £4 to £6 per week? Is this something which employers should be addressing directly, or should they encourage employees to speak to HMRC themselves? And in thinking about that, how do we determine whether home working arrangements are regular if they are still intended to be temporary?
In terms of the home working arrangement, so considering life before coronavirus, if that's still possible, the arrangement was, HMRC had long-standing legislation that an employer could make a contribution to the additional home costs of an employee who works at home under a regular, and determined home working arrangement. So, an example, somebody saying, I'm going to work at home this Friday because I've got a delivery coming, isn't a home working arrangement. Somebody who decides they will work 2 to 3 days a week on a regular ongoing basis, agreed with their employer at home, would be a home working arrangement. You have to be working at a substantial amount of your working time at home rather than in an office or another location for it to be a home working arrangement eligible for that payment to be made without any liability to tax and national insurance. HMRC said from April 2020 that because everybody ended up becoming home workers by default, or a great proportion of us, that working at home due to a coronavirus restriction would tick the boxes for it being a home working arrangement. So as it stands today, an employer can pay £6 a week to an employee towards the additional cost of their heating and lighting from working at home without any liability to tax and national insurance. But it's worth bearing in mind that the change to legislation that brought that into play for coronavirus has only got a limited window. It expires, I'll have to double check the date, in October, as I understand at the moment. So what we don't know is where the government might move with it from there. Considering the cost implication, like I say, yes, you can pay it as an employer. Of course, you're adding an additional layer of cost into the business at that point. What HMRC have said is that same £6 rate they will accept if an employee wants to make their own claim for tax relief in respect of home working expenses that they've incurred. Of course, it's not as valuable to the employee because they'll only be getting 20% or 40% of that £6, but it might be, a medium ground if the employer can't or, doesn't want to fund the additional cost.
Okay, thank you very much. We've probably just got time for 2 more questions. Paul, if we offer an alternative role to an employee that is accepted, does this break the employee's continuous service, or does their start date for this purpose remain as the date from their original role?
They keep their continuous service, so the start date remains the same as from the original role.
Very clear, thank you. And got a further question on the coronavirus job retention bonus scheme. Can we claim £1,000 retention bonus for each employee we keep on, even if we've brought them back already and have no intention of letting them go after November, January?
Well, James may have an answer, but as he said, we're waiting for more details of that scheme. But I think the answer is yes. The government aren't going to look into your intention as to whether you are planning to keep them on or not. So I think the answer is yes. So as a taxpayer, I think a lot of this money will be wasted, to be honest, because they'll be paying employers to keep employees that they'll be keeping on anyway.
Yeah, just to round out to that, in terms of the commentary we have had to date, so the government, prior to have suggested 9 million employees have been furloughed at some point, and they suggested the cost of the bonus scheme was going to be 9 billion. So that's £1,000 a head, suggests that everybody who has been furloughed at some point, for at least the 3-week period prior to the end of June, would be somebody who you could claim the £1,000 bonus in respect of. But again, devil's in the detail.
Okay, fine. I think we've just got one more question I think we can just squeeze in. It's a legal one. If you're restructuring a whole department, do you need to talk to all employees at the same time, or score objectively and then offer the different roles? And presumably there is no need to ask people to apply for new roles.
Well, it's up to you. There isn't necessarily a right or a wrong way to do this. My preference, to avoid the sort of minimum disruption to staff, would be to do the objective scoring and then offer the different roles. And I would prefer to do it that way round, rather than just to invite people to apply for the new roles. I think that's often quite artificial, because the staff already. You can hopefully score them objectively, so you can do that whole exercise, behind the scenes, and then simply jump to the stage of offering them the roles going forward.
Thank you, Paul. So apologies to anyone if we haven't got to your question this morning. We will follow up after the webinar. We will be also keeping a copy of the webinar if you do wish to access that, and we'll be in touch in due course in terms of the best mechanism for doing that. Thank you very much for your attendance this morning. Thank you in particular to Paul and Jim for your input, and hopefully that's helped to shape your thinking for the future. Thank you very much once again.
Thanks.
Thank you, Richard.
Thank you very much. Bye.